Shifting focus to portfolio performance, the Financial Mail has a hot stocks portfolio and the publications portfolio more than doubled on the JSE's All-Share Index. This as 2024 was the resurgence of South Africa Inc. Marc Hasenfuss from Financial Mail joins us to provide more insight on the portfolio and what lies ahead in 2025. Thank you so much for your time, Marc. Now, how deep is the value that investors saw in SA Inc. stocks last year?
Well, if I'm going to be brutally honest with you, a lot deeper than what the FM portfolio reflected. I mean, we did okay. I think if you go back to the beginning of 2024 and you said you're going to get a 21% or 26% return with dividends, you'd probably grab it with both hands, because the beginning of the year was very fractious. It was ahead of the elections, a lot of jittery nerves out there. Things obviously turned out very well with the Government of National Unity, with load shedding, etc. But having said that, you know, some of our portfolio manager friends did a lot better than us. Mr. John Bickard, Mr. Deep Value, was talking about if you were invested in SA Inc., you could be doing 50%. And I think he was probably right with some of the stocks he picked. So, yeah, look, let's be fair. Our portfolio is not a pick. It's we take one share out of each sector.
Yeah.
So we are a little bit hamstrung with that. We're not flexible. But I think if you dig into our portfolio and you look at what offered the best value, you know, to shares like Argent Industrial, which is up, you know, over 80%. Outsurance just blew the lights out, 60% up. That was so unexpected. I didn't think I'd ever seen anything like that, but that was incredible. And then little Calgro did very well for us as well. And then, you know, the others like Udeco and strange enough, we got Anglo, which is the one commodity share that performed. We were awfully lucky to have that because it was corporate action that pushed it up. So, yeah, it's a bit of luck with us as well. But I do believe if you were in SA Inc. heavily, maybe 50% is extreme, but I think you would have done very well.
Well, I mean, with SA Inc., would you say that there is more room in the glass and that it's not full yet?
Yeah, no, that's the difficult question. I think you could probably see that reflected in the narrative of the cover this year, is that, you know, if you look at some of the growth shares, we've had two, let's call them new listings. They're not really new listings. They're offshoots like Box and We Buy Cars. We Buy Cars at a longer runway. They did very well. The share price is screaming ahead. Box has done nicely as well. But then you look at other popular stocks that did well, Mr. Price, Pepcore, etc., Clicks and things like that. Are they fully valued? Is Outsurance fully valued after a 60% gain? You know, that's a difficult question you're going to have to wrestle with. I mean, you probably notice and discuss, Outsurance is a case in point. Our writer, our financial services writer, decided he wouldn't go with Outsurance this year. He'd go with something much more doer, and that's momentum. So obviously you're looking for value again. You're looking at something that's underperformed a little bit. I think some of the stocks have run ahead. There's a suggestion in our narrative there again that some stuff is fully valued. I would possibly concur, but being in the market a long time, good stocks tend to run hard and they keep running. So who knows? It's a tough one.
I'm actually interested to zoom into the banking exposure that you have in that FM portfolio, because I mean, for the longest time, banks were all seen to, you know, really have value, and all of them, of course, some more than others. But I mean, Bank of America coming out and basically saying we can expect upside in Capitec, Nedbank, maybe not so much Standard Bank this year. What does that look like in terms of what you have in your FM portfolio?
Yeah, look, so this year, might correct me if I'm wrong, we had First Rand, which was okay. You know, I suppose an inspired pick, and we didn't get it. And it's a bit left field, would have been something like ARC Investments, which has got the Time Bank exposure. Now, that really ran, but you could also argue it's the portfolio. But let's be honest, it is Time Bank.
Yeah.
So, yes, Capitec did fantastically well again. But again, you know, something like Nedbank, which has been a bit of a laggard, they outperformed. We didn't have them. It's a difficult one. You know, banks should do well, but it's a tough choice between the big four.
Yeah.
Do you choose Capitec? It's run hard. It's people always say no, it's done, it's overdone. But every single year, it continues to churn out profits and do well. So again, a tough choice.
Marc, do you also have your hands on some of the stocks that nobody really pays attention to? I mean, I guess maybe parallel to that is what you call in the video gaming industry a non-playable character, where that's just in the background. Nobody really plays that character.
Yeah.
I mean, could there be a lesson in there to not overlook some of the shares that are not really talked about?
Yeah, look, that's there are two aspects to that. So yes, you could pick an unknown, and I think one share that's come up all the time, and it's possibly more in my small cap portfolio that I pick, is one called New World Industries, which one of the analysts also picked. It's pregnant with value. A deal's got to happen. Surely, it's so cheap. I mean, the cash is almost the share price. Every year nothing happens. So, you sat for a year without making money. There were some interesting little picks this year in our portfolio for 2025. Someone picked psilocybin holdings.
Yeah.
I don't interfere with the writer's choices, by the way, so they can pick what they want. I think rainbow chickens is quite left field. I think that would be something that most people would try and avoid. It's got legacy issues. It's in an industry that has lots of problems, that have curveballs coming all the time, diseases and maize prices. So sometimes you get those right, and sometimes they can be awfully wrong. I mean, I think in our portfolio this year we had Vunani, the financial service company. That was our big laggard. We didn't get that one right. We expected more from them, but you can't get everything right, I suppose.
I mean, it's going to be quite an interesting year. You talk about New World and the fact that investors have been waiting for a deal to happen. And I think a lot of investors at this point are trading some stocks as they wait for a deal. It looks like a ripe environment for M&A activity as well. And as we're talking about kind of the unknowns, more smaller stocks, you have the JSE's AltX as well, where you have the smaller stocks. And some of the new stocks have actually gone on there. I think Vest also, when they listed, they went on there. How's investor appetite when it comes to that? Is it still maybe lagging a little bit?
You mentioned corporate action, so we'll probably be chatting next week again about this, because I think our cover story next week is on potential corporate action following on the cover story. So I think a lot of the little companies, especially on the Altex, they tend to get overlooked especially if they miss earnings, or they fall away from the strategy. And then there are a number of companies there. I think new listings like Copper 360. I saw the share price taking a hell of a pounding. That's that's a commodity business, and things can happen there. But whether people look at stuff like it and say it's cheap and there's corporate action that gets executed, I don't know. We'll have to see. What I can say is, yes, there are still spots in the JSE where there is enormous value, I think, especially amongst the smaller unknown stocks. You've got to look hard. And you've got to be quite brave, because sometimes there's no track record, and sometimes there's just a kind of a lethargy in trying to get value unlocked. People are just trudging along and keeping their businesses going. So you need a catalyst that doesn't always arrive. So you can sit for a while with a bit of dead money, and that's always an issue. It's the opportunity cost that gets you.
All right. Well, thank you so much for your time there, Mark. And hopefully there will be a lot of action that's happening this year, and also looking forward to those deals that we are anticipating this year. That was Marc Hasenfuss, editor at Financial Mail.